Hello and welcome back. So this will be the continuation of the previous video. Okay, right? So firstly, let's talk about where we had and where we talked we treated last time and the next topic we will do today. Like I used to recap first and then continuation. So basically, this is the outline of everything we're going to talk about. So we have the candlestick, we featured the candlestick, featured market structure, we featured trend lines, and now we at supply and demand zones, right? We have identification of supply and demand zones and how to trade it. So I think we should be able to trade this, and since it's a pre-recorded video, by the time you watch this and by next week, entries and risks to reward will be the thing that you're going to trade because you need to now start taking entries, even if it's like demo account or before you step into the real account stuff, you still need to start, practicing a bit. So I would recommend you back testing, but before that, you still need to finish this supply and demand, which is not much, to be honest. The ebook prepared kind of simplified everything. Um, so simplified. Make sure that the supply and demand zone, each topic was broke down to make you understand very easy image and everything. And I think I showed you that in the previous video. So if you look at the ebook right there, so yeah, where we're talking about the trends and rally moves and the drop moves and the rally and the waves, the market moves. I think we treated those in the first video. But if you have any questions, so just put those questions to have a Q and A session so where we can talk about the questions where we can talk about everything we've treated, and if you have any question and I'll be able to answer those questions. So at we stopped at we stopped yeah. I think yeah we've talked about demand zone and supply zone, and we did some illustration, we did some examples. So one of the examples we used last week, we kind of use we used the euro dollar, we used the pound dollar. So let me check on this. And in my last prediction, as you can see, this was my prediction, right? My prediction was we're going to get a retest on the demand zone here, all right? Since we had a break out of the demand zone right here, all right? It's tested back into this demand zone and then formed trend. And as you can see, it did exactly what I said. So I recommend you watching the previous video to understand that. So you can see now that we are on a bullish move. All right, we are on a bullish move. So one thing about supply and demand, I've always you know talk about is this is very accurate and you can use it for intraday trading. So let's say you are looking for a trade into like 1 or 2 days interval. The first strategy I kind of recommend is the supply and demand zone. So this is just very good example, and I love the way markets really do this. So let's say you had your buy limit here, all right, you win fantastic profit. So this is like the second trade we took in GBP and so it is, and yeah, and we're making profit, all right. So I just want to show you some of the things we also checked on the previous videos before we move into this one. I think we check on the euro dollar as well, where we identified supply and demand zones as well. I think yeah, is it. And here it's where let me put it back to let me put it to 4 hour cycles. So as you can see, you can see the demand zone and the supply zone. So we have the grays right here, and you can see the market bounce of the gray went for a rally, tested back into this demand zone, and then did this again. It did that again. We did a little back test on this. Although the price didn't test on this demand zone later on, it formed a market structure right here, which is like a little resistance. I mean support right down here. So from there, the market did another rally. So the thing I want you to notify here is that before this drop, is that before this, the markets make this drop, this new drop we had today, you can see that we add a base again. So this is another base right here. All right, we had another base right here, and then the market broke out of this base and then dropped, right, and then dropped. So if you were to sell this, you will have made about I think 80 to 100 pips in profit. You- Um, and by now you should be closing in profit. And here is the supply zone. And the market is coming back down to the demand zone, right? So one of the assignments you have to do on your own, you will have to, I think in the last in the next session we're going to have, I will just have you to go to your trading view, and then you will have to have a back test on, and then you have to back test while I'm watching, and I have to see that you can really back test everything. And once you can do that, you have to do it at least, let me say, once or twice a day, so that you'll be used to this and you'll be able to identify supply zone and everything we've treated here. So once you do that, and once you can do that perfectly, we're going to go into entries and risk to reward ratio. And once you do that, you'll be able to take entries on your own, and before you know it, you are through the big course, you know, eventually. Um, So let's move on. So one of the things we talked about is about all I think in the last one is this mid zone. I really want to make explanation on the mid zone because you can see right here we talk more about the lower and the upper zone. And but in the market there's sometimes a mid zone which happens in the middle. This is the top zone, this is the lower zone, and this is the mid zone. And it do happen sometimes in the market where we have zones between all this, and then yes, you can actually take a trade um, in the mid zone. All right, but let's explain it. So what's the mid zone? It's very self-explanatory. Um is the zone in between lower and the top zone. And you can look that up here in the chart. Like, give me a minute, let me look for a chart and I'm going to identify one of these. So, okay, so I think this was yesterday when we were explaining supply and demand, and as you can see, we kind of explain all this one by one. We're still expecting the price to drop back to the demand zone, and then you can put on a new buy. All right, and if it test this supply zone right here, we should be looking for a sell. So this is the top zone, right? This is the top zone. So I'm looking for a mid zone right here, and I'm going to show you that. So let's look into this trend line. Let's look into this trend line. Just within this trend line here. Within this trend line here, we have the top zone around this area here. So top zone is around here. Yeah, the top zone is there. And then we have the down zone, which is the lower zone around this area. The mid zone, all right, is there. The mid zone is just in between them. And it's yeah, most time it's just a place where the markets will retrace to. So let's say we have the market coming down from the supply zone, all right? So the price is making its way down, making lower lows, lower highs, lower lows, lower highs, dropping down, all right? So and it goes to the to the lower zone, right? So we're going to have um let me do a very clean illustration there, all right? Let me go into a blank space and do more illustration. So we have the price coming from the supply zone, right? Dropping down, making a lower low, lower high, lower low, lower highs, lower low, lower highs, all right? And dropping to the lower zone, all right? So here is the upper zone, right? Is the upper zone, and here is the mid zone, and here is the lower zone. So sometimes, let's say you want to look for a sell in the market, you're looking for a sell, right? And the price has, break through the supply zone, probably going back to the lower zone. And you're like, all right, let me buy from this demand zone, right? Or you want to take a buy from here because the price goes got to here. You have to take note of the mid zone right here because the price could just come up here, test this mid zone, and then continue bearish. All right. And that is why the mid zone is really, really important because it might be a place where price just want to grab liquidity and then continue to the former direction. And one thing you have to take note is how heavy the price is coming. So if you have a very long-term bearish trade, bearish market, I would say just go with the flow. You understand? So go with the flow. If the market is going bearish, sell. Don't trade against the trend. And that's one of the mistakes everybody makes. All right. Trading against the trends, don't do that. You just have to, put this if the market is going down, look for a sell position. All right. Even if you're looking for a short-term trade, try it to be a bearish position because you will be on the same side with the big funds, with the big institutions, with the big hedge funds, with the big banks, and the people who are really moving the market. So, and especially when it comes down into stock trading, it really matters what the company is doing. So the company is in a bearish trade, try and sell, or else it's oversold. And when it's oversold, you're going to know that because it's bearish, the bullish is going to change, and the way the candle, like I said, in the market structure, and that's why we did candlestick and market structure. Um, the way the candle forms when it starts feeling bullish and engulfing candles, you know that the bulls are taking it into the market, and then you can now go for a bull trade. But one of the things I just wanted to make sure to know is about this mid zone. And now let's look into this book. As you can see, the price could come into this mid zone and buy, and at the same time, you can drop into this mid zone and continue downwards. Is a very, but is a very, a place where two scenarios can play out. It's not somewhere you really need to, put your attention out. So as you can see, the price could be coming down. You can see this is a supply zone coming down to the demand zone right here. It went back because there's another supply zone right here. Tested the new supply zone and dropped down. Then you can buy from this demand zone and sell from the supply zone. So don't forget, always identify your zones by writing it down. Maybe it's demand zone, maybe it's the supply zone. Always put it in, try to put it, identify the zone All right. And um, give me a minute, please. So, as I was saying, the mid zone is very important as you are identifying the supply and demand zone. Always identify the mid zone. So, what I'm going to do now is go into a fresh chart and identify supply, demand, and mid zones. All right. I'm going to go there now and identify those. And so, let's go into a fresh chart. Let me choose the DXY. uh, So, the dollar index. And I'm going to clean this. I'm going to clean this chart. And as you can see, I've been trading this, actively trading this for a while now. I've been always analyzing this. So I'm going to delete all drawings, right? So delete all the drawings and make it fresh. So what we are going to do now is identify supply zone, demand zones, and mid zones. So in this area of the market, let's say from here to the lowest point, I think here, or let's put it around from here. Okay, so this is where our analysis is going to be in the DXY. So let's check it out. So where's the demand zone? All right, so let's say I'm trading this bear. I really want to put in an entry and I'm using the supply and demand zone strategy. So what's the first thing I'm going to look for? So I'm going to look for the high and the low. Where's the highest point of the market? Where's the lowest point of the market? So that's the first thing. And I'm going to do that by this. So this is the highest point, right? The lowest we have right now from the daily is around this area. All right. So this 1, 2. So if I'm trading right here. If I'm analyzing from this place, I'm just kind of checking where the market is forming from. So from here, you should know that the price is coming from a demand zone down here. So the trend line showing that the price is bullish. All right. The price has been bullish. And so one of the things I'll say is, so this is a base, try and identify base, another base right here, which gives us the supply zone. And looking from the daily time frame, right? And right here, we having a zone as well, which is a demand zone, all right? So what are we going to do? So this is a demand zone here. There's a demand zone around this area. I think the demand zone, yeah, I think it kind of come from here. So from the demand zone here, you can see we had a rally. So when the price busts out of this base in a bullish trend already, we had boom, the first rally. The price retested this demand zone and then continue bullish. All right, so it's bullish, making higher highs, higher lows, making higher highs, higher lows until it gets here, and then started indecision and just ranging for a bit. As you can see, it was, and like the last class we did, this is called a base or indecision zone because the price is not making a decision yet. All right, it's a point of like an exhaustion from the bullies. All right, so the bulls have been pushing the market up until here where they got indecision and the price started ranging. So let's say the price continue moving up from here. This will have been another demand zone, all right? But the price didn't do that. The price broke down to the downside. and giving it a um, validating it as the new supply zone. All right. So now we have a supply zone because the price range here for a bit before actually making a drop down. So that makes it our new supply zone. So from the supply zone, you can see the price made this drop, continue, broke this bullish trend, and then bounce back in this demand zone. And as you can see, when it comes to this demand zone again, the price reacted to it, although not as strong as it did previously because the price is coming from a bearish market. This is from a bearish market. Now, talking about the mid zones, since we're looking at the highs and the lows there. So this is the high, this is the low. So first thing I would love to say is this is the high upper zone, yeah, same as our supply zone. This is the lower zone, same as our demand zone, and this is the mid zone. This stationer, this is the mid zone. Sorry about that. That's not what I meant to put. So this is the mid zone. All right, and this is why I said you need to um take note of the mid zone as well. You can't just be looking at the supply and demand zone. Always you have to look in between those zones depending on the time frame you are using. Right now I'm using the daily time frame. So let's say you're using the 4 hour, whatever time frame you're using, you still have to check the mid zone as well. So now let's check this mid zone and what do we notice? All right. So let's go a little bit into lower time frame. So let's go into the 4 hour time frame. So checking on the lower time frame, you can see so we have our supply zone. Okay, we have a supply zone here, right? We have a demand zone here. We have a mid zone here. Here is another supply zone, right? Because we had a base around this area before the price moved downwards. So let's look for that base. Where is the base? So as you can see, the price coming down from here, range around this side, made another drop. So within this area, let me close this zone. As you can see, let's use the line chart as well. So yes, here we have a range, right? Here to here, right? The price ranged here, and the indecision was that, as you can see, if the price is going to continue bullish, all right, because we are on a bullish trend, don't forget, the price was on a bullish trend, it was coming up, making higher lows. And even though the price tested this, you're going to have some people who are going to, start buying from here, thinking that the price is just going to bounce off this trend line and then move up, continue moving up, right? So the indecision took place here, creating a base. And what happened? The price continued downwards, making this place another mid zone, a mid zone for supply zone. So here we have a supply zone, and then the price will drop into this demand zone, right? We had our first push up, our first rally, but got bounced back. Why? Because of this supply zone. So this supply zone goes as far it's not broken yet. Um, what I mean by that is as far as the price hasn't breaks through this mid zone, anything that touches this will be coming back down here to the demand zone. So that's basically it. So we have the price touch down here on the demand zone. We test back on this supply zone, point at the mid zone as well. Although we have another supply zone up here, all right? And pushes down. And this is the current market state, right? The price is still pulling up here, but going to this supply zone again, and as you can see, it started pushing downwards. So if you understand all this is not going to be a problem. To take your entries will be easy for you. All you have to do is to wait to for the market to be exactly where you want it to be, and then you take your entry. You don't really have to, do too much to more technical analysis. So this is why I recommend supply and demand most of the time. So let's go back into the candlestick chart. All right. So as you can see, this is another supply zone, and when the price tested this, it bounced off back again. So let's check on the book again. And this is what I was telling you about: top, mid, and lower zone. The price could top another supply zone within this mid zone, and then you can sell. So let's see it there. So from here, you could sell, right? You could have sold this short, where you go for a short position. The stop will be above the first candle, and then your target will be within the demand zone. And what we are expecting now is the prices to touch down into this demand zone, right? We might look for some indecision, and then we expect a new rally, right? This new rally, you could be preparing yourself to take a long position from here. Your stop will be below this zone, and then your target will be a supply zone here, or at the next supply zone up here, because that's where we expect the market to be. It's that simple, right? It's that simple. And what we need to do now is to do a lot of back testing, all right? So we need to do a live back testing where we're going to be live, and then we'll be going back in chat and be doing live back test. So how to mark a zone, and I've talked about this. So, but again, let's talk about it again. So, how do you mark these zones? All right. How do you start marking them? All right. So, let me go into. I think we should use the same chart, or should go into another chart. So let's just talk about it here in the mid zone. Let's use this chart. All right. So let's say I want to mark this zone, and what I'm doing right here is because mark this from the daily time frame. But let's say I want to mark this zone right here. So what you do is you start from the previous. So now I want to mark this, right? I want to mark this supply zone. This was the base, right? First thing you have to do is identify the base where the market price ranged, right? So what I'm doing now is I'm marking the supply zone, which is going to be here. So why here? Because this is the last candle before this big candle right here. So you can see here, if it's going to be a bearish candle, I mean, if it's going to be a supply candle, you're going to mark it from the previous, mark from the first candle's low. So let's say you were treating the supply zone, you mark from the first candle's low, and in terms of bullish, you pull onto the second candle's low, which is the previous candle that formed. So the mark from the first candle's high, right? That is about bearish and pull out to market. And everything here is just basically talking about, the engulfing candle, what we treated here in the candlesticks and market structure, engulfing candle and bullish engulfing candle, pin bars and stuff. So once we have I think we've already know what these wicks are, long wick marking. We know what the wicks are. So you have to identify these, and that is how you're going to, able to pick and mark your zones. So these are new supply zone, as you can see here, up here, and you're going to drag it over, So check this out. So this is the supply zone here, and this is so to pick this to mark the zone is not really the hard thing. The hard thing here is to the patience to wait for the price to come and meet you where you want it to, and not jumping into trades, and not just saying ahead of yourself, not being too sure, like you're controlling the market. No one controls the market, all right? So this would be the marking. I think we've treated the marking, and then we're going to talk about the setups, all right? How to go, and I think we've talked about the mid zones and the lower zones, all right? The setup of every zone. So let's say we have to go back to the daily time frame. You're still using the DXY, which is the dollar index. Is a index market chart. So we're talking about the market. We're talking about the dollar here. So it's trading within the zone, right? So that's what they're talking about here. The setups at every zone, right? So it means you can trade at each zone. So let's say you were setting up a trade within the supply zone here. So how do you get in? All right. How do you pull your entries? All right. So that's what they're talking about. And we're going to talk more about this when we get into the entry topic and how you can make your own entries. So first thing I do is I'm going to do a little bit of replay, and we're going to go back in time, and we're going to do this. Right. So now we know that this is a supply zone because the market is ranging, we've seen the base, but we want to get our entry, right? We want to do our setup and look for how we're going to make our entry in, right? So let's press the play button. So the first thing you're going to notice, yeah, I'll still have to go back a little bit here. Still have to go back. Think, yeah, good. So lower the speed to one. Okay. So the first thing we're going to see here, we're going to notice is the breakouts. All right. The breakout here, the first one happening here, but the second one happening here, you're not going to rush in by just pressing the sell entry right away, right? You're not going to rush in by setting. What you're going to do after the breakout now is to set sell orders or sell limits at the supply zone. Just at the beginning of the supply zone, you can set uh, your sell limit here, and the stop would be at above the market structure. If you have a very good risk to reward ratio, it just have to be above this. And if you want the market to breed, but the target is down here, so I think the best stop loss we're going to have is going to be above here, all right, which is going to be above this little zone we have here. So what you're going to do is you're not going to go in with the market execution. You just have to wait to see if the price is going to continue down. It's very good to always wait for a retest. So markets will break out. So here's an example. I'm going to make a little illustration here. So oftentimes the market, after making a decision and base and all that, after breaking out, price most of the time, like I can say 70%, will still go back into this trend and into this base, retest it or grab liquidity before actually making the big move. All right. And that happens almost every time. So that's what you're going to use as your own entry point. This gives you the best risk to reward ratio instead of going in as a market straight market execution, can put you into a lot of doubt. But going into the limit can just it gives you like the best assurance that you know exactly what you're doing. So let's press the play button. And what did I say? The price moved up, all right? We had this retrace, and this retracement, it was a whole day, all right? A whole day of black candle. And let me just, okay, let me put it right in. All right, so this is what I'm talking about, right? This is what I'm talking about. You can see we have this retest, right? And this retest, this white candle you have here was 24 hours. So 24 hours, let's say you entered for here, you've been 24 hours straight loss, and it can put you in some kind of dilemma. But let's say you wait for this, by now your order will have been activated, right? And once your order is activated, let's see how the market does, boom, in profit, right? And in profit, so once you get into a profit, one thing you don't forget is all the zones, right? All the zones, you have to identify them. So there's another zone right here because the price ranged a little bit before going. So there's another demand zone right here, although it's small. So this place would be where you're going to take the first profit. All right, you've gotten it right from here to here. You take the first profit from here. So the market broke this zone here, continuing up. So from here, you should have taken enough profit and you should be up in, you know, 20%. So for getting the demand zone, what we're trying to explain here is that each zones has a zone where you have to enter it. All right, you can't just um, press the sell and buy button. So with everything we talked about the the candlestick market structure, everything will have to come in place before entry. You have to check the candlesticks, you have to check the market structure, you have to check the trend, and then the supply and demand zone, then entry, and then the risks and rewards. All right. So that's about it in talking about the mid zones and setups in the zone. So what we're talking about is Quasimodo, and Quasimodo is about some chat patterns, and I'm going to talk about this even before this, and I think it's something you know you've known before. So it's just chat patterns, right? As you can see, it's chat patterns here and then. We're going to talk about that now. All right. So let me go into a blank space, and I'm going to talk about this. So Quantimodo doesn't miss chat patterns, all right? So chat patterns, there's a lot of chat patterns, a lot. There's a whole book about chat patterns, and you can just print out one of those, maybe put it at your station. But before talking into that, let me just give you some, right? All right, chat patterns. So we have head and shoulder, where we have the first shoulder, we have the head, and then we have another shoulder, right? The market structure will be below, sorry about that. The market structure will be below this, holding this pattern to be able to hold. And then we have a lot. We have the breakout, we have the fake out. So the breakout is, let's say we have an uptrend, high highs, higher lows, highs, higher lows, higher highs, higher lows, in a bullish trend, right? A bullish trend, we having this higher highs, higher lows, and then the market decides to break out of this trend. So the pattern says we retest this trend line before moving down. These are kind of things they're talking about here. Buy setup, buy issue. You know the difference. You know the difference between the buy setups, the buy chart patterns, and then the sell chart patterns, where you sell and where you actually buy. So I think in the next video I'm going to say basically will be about these chart patterns, where I'm going to just pull out the book about the chart patterns, and we're going to fully talk about sell and buy chart patterns and then identification of chart patterns in the real charts. After that, I think that would be the end of supply and demand zone because there's most of the thing is most of everything we're going to talk about is going to be chart patterns and then how to identify the, the this is the first breakout in the engulfing, and I think we've talked about this in candlestick and market structure. So these are things we've talked about already. So it's going to be like a brief theme where we cover everything talk about. So we're going to talk about chart patterns and we're going to finish the supply and demand zone, and then we move into entries and risk to reward, right? So yeah, that'll be the next thing we'll be talking about. See you.